This is an Economics 101 presentation. It will explain why graduated taxes are fair and sales taxes are not. Much of economic theory is just common sense. So we're going to show an example. We'll have three people. Person one who makes $50,000 a year and has $1,000 in assets. Person two who makes $150,000 per year but has $500,000 in assets. And person three who makes $550,000 per year but has $2 million in assets. Now we're going to award somebody a bonus of $500, but who is it worth more to? Person one, person two, or person three? Common sense says it's worth more to person one. This is a basic economic theory that each dollar you receive is worth less to you. So now we're going to give an example of how sales tax is a burden. For each person, we're going to use Charleston County sales tax of 9%, which is extremely high. So each person is going to spend $400 on clothing. They're going to spend $500 on a microwave. This is going to give them a total tax burden of $81. So for person one, $81 is 8% of their weekly gross income. For person two, it's 3% of their weekly gross income. And for person three, it's less than 1% of their weekly income. So person one spends a much higher percentage of their income on sales taxes. This is why sales taxes are grossly unfair and not the way to tax. Wealth taxes tax people much more fairly, and let's look at why. Currently, we use an income tax. It's graduated so that the more you make, the higher your percentage that you pay. And again, we said each dollar is worth less to you. Your first dollars are for subsistence, and as it goes up, that's when you start to spend on luxuries. So if we look at a wealth tax is exempt the first bunch of assets, just like a graduated income tax, and they do not start until you get quite high up. I believe Elizabeth Warren starts somewhere around $100 million where the tax starts, so that's really not going to affect you and I. And in this case, if we used a wealth tax with rates like this, person one would pay 0, person two would pay 5,000, and person three would pay 55,000. And this is much fairer because for a person who only earns 50,000 a year and only has 1,000 in assets, they need every dollar and nickel they get. Whereas a person who's getting paid $500,000 a year and has $2 million in assets, $55,000 is really nothing. So this should explain to you why wealth taxes are much fairer and they do not inhibit spending and really are the way for the American economy to go. Thank you for your time.